Welcome back, everybody. Hope you all had a great weekend. Lots going on. Friday was another dumpy day. But the most interesting thing for me to be watching at the moment is not Bitcoin, but MSTR. MicroStrategy. MicroStrategy is essentially the go-to Bitcoin index fund without being an actual ETF or index fund. This is the largest public holder of Bitcoin. Michael Saylor recently did have to step down, or he voluntarily, let's say, stepped down after a really bad quarterly report. He is the biggest proponent, the biggest bull of Bitcoin at the moment in the public sphere. And he unfortunately got trapped in his own setup. He hasn't left the company. He is still an active member of the company, but he is no longer the CEO. And unfortunately, there is a reasoning behind that. Public image and just generally speaking, investors have called for his head. But I think this is my personal, just speculative thoughts here. It's a bit of a setup. If you look through the SEC filings, you will see that in the past 6 months, 12 months, there have been a large number of large investment companies who have had to file that they own more than, I believe, 7%, 8% of MSTR stocks each, which means that, there is a lot of pressure in this space now with big guns at the door, and they get what they want. And unfortunately, the truth is the way the reporting is required. You have to mark down when Bitcoin loses value, but you can't mark it back up over time. You can't take the profits, that sort of thing. I mean, there's a lot of detail there that I'm skipping over, but the reality is it's not really a fair game. But there are, I think it's 100,000, 115,000 Bitcoins now owned by MSTR. And as far as I can tell, those are still locked up to 2026, 2027, and beyond. I believe maybe there is, and I'd have to look back at the numbers, but 2025, the first round of investments that were publicly, semi-publicly available, where people were able to give MicroStrategy money, and then that money was used for purchasing Bitcoin in the previous bull market, which essentially was underlying a lot of the bullishness in the time leading up to the crash. So, we'll see what happens. But here's what I want to say today. GAN fans, the deeper I dive in, the more interesting it is. And if you have advice and thoughts in your own strategies around GAN fan analysis, please do share your knowledge, as I'm trying to do here as well. There's the GAN fan in play, and then also there's this gap theory. There's a very interesting effect. If you've never heard about it, it's like pre-market gappers. Essentially, if you look in the history of any stock on the public markets, which of course public markets on the stock markets anyways have opening and close hours depending on the exchange, right? So, and in the US, we generally see the majority of the large companies here who have news or speculative events or things that happen overnight, announcements, product announcements, that sort of thing, which are scheduled for post market generally. Or if over the weekend, Bitcoin, for example, for MSTR, if Bitcoin has a big move, to the upside or the downside, we often see a large amount of incoming liquidity at prices that are significantly different than the closing price of the previous day. And so when that happens, well, the market makers have to cover those calls and those options, right? And not the options, but the buys and the sells. So what can happen is if people are buying at any price and no one's selling at the previous prices, then well, we have this gap, right? So the day ended on August 18th, which was, let me see here, August 18th, just to be sure, was Thursday. So this was Thursday, and then we had a huge gap down on Friday, right? And it actually sustained. And we see that actually makes sense as well, because during the weekend, Bitcoin also then actually dumped as well and sustained, right? We didn't have any good news or reversion yet. But what you notice, though, is if you come back and find the previous times when we have this, every time it gets closed, right? These are all closed, right? It gets closed. This one, closed, right? This guy is a bit more difficult. Let's see, this guy, there's some small ones. These all get closed. We see this guy gets closed, and it's actually like incredibly accurate closing too. It's like boom, big drop down. We eventually did close it, and then we immediately returned back down to the same direction that we were going in the prior cycle before the gap, right? So there's some research which indicates that up to 3/4 of all gaps get closed within 48 hours. Essentially, within 24 hours after the gap, 24 to 48 hours after the gap, we have the gap closed, meaning the trend at least temporarily returns back. Just like if we look at, in this case, it didn't. It took. Let's see, what are we at? The hour. We're at the hour. So it's like if this was opening on the 13th, which is again in the weekend, so 13th open, we drop heavy, and then actually this took exactly basically 7, 8 days, right? So it doesn't have to be 24 hours, 48, but in this case, this one bumped up, and within 24 hours, it also then dropped down and then returned and then continued back. We cover those gaps very quickly, and in most cases, not all cases. This is something you'll hear a lot of people talk about, and there's no real good explanation for it, except to say that there's always a market maker on the other side of the trade. There's very rarely an individual making these trades. You make a trade on your broker pings those trades in batches to market makers. The market makers are obligated to fill them, and then they collect on whichever direction it is that they have to collect, and they'll probably be losing value for some time, but they want to recollect. So they're capable of then, in my mind, pushing the price back to where it needs to go by returning those shares that they've been collecting back to the market, driving demand, driving sales, and recapturing the liquidity and holding the fees at the end of the day. That's all they need to do. If they can, just like any good old bookmaker can make profits, not by making the right side of the bet, but by taking both sides of the bet and then profiting off the fees. Anyway, it's speculative, but we can see all these. There's a lot of there's actually multiple gaps in this area here. This has just got filled, and once it got filled, we had a huge gap to the downside, and the market is opening as we speak. Let's go ahead and pull this into a smaller time frame and just watch it. My speculative, assessment here is that we have a lot of liquidity. This is a massive gap here that needs to get filled. someone's sitting on a large amount of, at least this volume in a loss, essentially, on the wrong side of the trade. However, let's look where we're at now. As we're watching, we actually opened up a gap right as we opened the market today. So what can happen? Well, we might actually come up, hit 281, and then return back into the right direction. Highly probable, given what we know. We also see that it's not necessary that happens, but if we do, then we could also, rather than just returning back down, we could finally hit this, make a bit of a W here, and then come back for a retest in the next week or so, leading into September, because September is known to be the trend reversing month. It's the end of a quarter, it's the end of a month, or it's the start of a new month, the start of a new quarter, and it's the end of a summer break when the volumes are lower, volatility is higher, and people come back to work, refocusing on the trades on a day-to-day basis. Now, let's see what we got here. We do have a rejection, actually, it looks like, off of the opening price. So it doesn't have to be that these get filled today or even tomorrow. We could very, very well be still heading rather towards some of these lower time frame gaps. We have a lot of gap liquidity still sitting for many weeks way down here. And so actually, given unfortunately the negative, the downward pressure of the market these days, it's also highly possible that we just bounce off and end up going down here and eventually capturing this liquidity, trading down here for a while. And as far as I can tell, there isn't any more major gaps to be filled down at these levels. They've all been filled, right? All these guys have been filled. So I'm looking at, a downside of 215. Okay, actually I lied. There is this major gap still from 130 to 134. Sorry, 126 to 134, which is pretty nasty, right? That's we don't want to get too optimistic here. That's another 50% drop, right? From current levels. Again, we don't actually have to hit those. We can do we don't have to hit them now, and some gaps remain open forever. Those were extraordinary gaps that were taking place during the point in which Michael Saylor and the team were buying large quantities of Bitcoin and really pushing the bull market forward. But we do need to be aware of it. On the upside, there are also more. There's this one. You can see those all got filled. There's some up here. So there's actually a bunch of unfilled gaps up towards the top of the charts as well, way up here, and we'll get there. The point is that I want to make here is all of these gaps are highly likely, highly probably going to be filled. We can't predict when. That's hard. But what we can do is see that actually there is some fan patterns here that are also lining up, as if, and is it coincidence? Someone is trying to build a short position along the way down, all the way into the end of the month to 215. So if we were going to see prices at 215 again, I believe at this stage it will be within the next 8 days. Take that with a grain of salt. Obviously, this is not financial advice. I'm not saying buy or sell. That's kind of hard at this stage for me to advise you to do that. However, I'm going to bet that before we get there, we will at least retouch 304 and get, because if someone wants to be accumulating rather than, accumulating, buying shares, they're going to be rejecting at this point. They do not want to hit these levels, because the moment we hit these levels, we will clear through them very quickly. This is a very strong, if you look in the volume profile, this is a very strong volume profile level. So it's not coincidence. There's not coincidence at all here in my mind that this, my mouse skills are really bad, but this is high volume here. And then when we started coming back into it, they weren't ready. They rejected it. The market wasn't ready. We rejected it. And then when we got there and we couldn't hold them back anymore, it just skipped right on past it, which means all of these guys are in the, anyone who bought long in this space is now holding the bags. And if we can reject here, they will not have a chance to sell at a profit. So they will get rejected, get pushed down this far into these zones, slow down at these angles which are really tight. We might, if we're lucky, we'll see at least 284 today, 285, 286, 287, and then we get into these zones, and then we turn around and kind of reflect and test and turn this into support, this line, which is clearly kind of being resisted as support. This is your retail market bag holders, basically. So the chart's a mess. Summary here is we have a large amount of liquidity locked up and being defended pretty clearly on both sides around the 200 or 300 level and 325 level. So if we can get through the 283 level, if we can get to 283, then we actually have a chance to at least hit 304 before being rejected and coming back down for a tighter, faster, quick pass down into these, to recapture these gapper liquidity just sitting down there. And we'll be hitting a lot of liquidation points along the way for anybody who was trading up in this zone. So watch out. Watch for those levels. Bitcoin is holding steady, let's say, after its most recent fall. And we'll just do this quick. No, this isn't the right chart. This isn't the one I was thinking. But we got an interesting play here with DXY, right? The DXY is the inverse. The inverted DXY is proportionally shown here in the backdrop of against Bitcoin, and you can see it's inverse. So normally it would be going the opposite direction, but if we look at it in the same direction, then we can see as Bitcoin is going down, the dollar is going up, which in this case it's going down, but you get the point, right? And we can see actually that it never stays that. It's Bitcoin is essentially ping-ponging back and forth between being above or below it, and we are tightening that range now. We are getting tighter and tighter and tighter, and we have now just fallen again, and we're off a little bit. So we should expect either a deeper fall into what is essentially the starting point from last year's, the last the start of the last bear run around 20K. So we might come back down here, retest that. But there's not really any good levels that I see except way down here into the 12,000 range, right? 12,000, 13,000, 14,000. which means we could ping pong into what looks like, if you draw this out based on the current chart pattern that's being formed from the resistance here, we could be looking at again something in September, late September. It looks like someone has a plan to put in resistance. I'm calling these, this is when it's on the bottom right. I'm calling it essentially sorry, not that. What am I doing here? Use color. Calling this a distribution fan, because if you look at it, pretty much every time we hit the next level, we get hit with a resistance line. And this line here, this one is actually the opposite. This is your accumulation zone. And so every time you hit one of these, we should be seeing support, but we're not. We saw it up here, but it failed. It failed very quickly through the main line. And now we're just bouncing through at the longer term levels, which these go all the way out till October, late October, so mid fall, when also we can expect some more volatility leading into November, December timeframe, when we know that Christmas is a very popular time to be trading as well. Volumes are solid, and we're stuck in a rising, what is essentially a rising wedge, right? I mean, it's the same as we were in before, but much tighter, right? We were in a rising wedge here, and we fell out of it. So if you look, here's the rising wedge. Sorry, my mouse skills are really off, but you can see that, and that goes all the way out till the late October. And here we have now the same, but on a smaller scale. And so let's see here. Let's put that back in the background. And we can see we're on a rising wedge here. We're just going like, boom, 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 maybe, and then eventually we might break through that to the downside, or we're going to push back through it, hit some resistance along the way, and retest. But we're looking at levels around 21,750, 22 max. This is a tight range, so 22 and 21, it's going to be $1,000 range over the coming days until it breaks. This could take days. This could take hours. We'll see. We're actually it appears we're in open market right now, which I guess our time has changed. Maybe summer. I thought open markets would open in an hour, but I'm off by an hour, I guess, for whatever reason. And so we'll see what happens. Watch MSTR at 285 to get for rejection. And if we reject, then we're unfortunately likely to be moving further down. I mean, if you kind of draw out a halfway point, the 50% mark between, sorry, and I'm just eyeballing it here, but the 50% mark between the first level here and the one half level here, that's like exactly where we started the day. And so we're likely to be trending between 265 and 282 as far as I can tell. I'm going to leave it there for the day. I wish you all good luck and happy days, let's say. We're getting some, I guess I will say that we're getting some vector candles, which means there's a lot of individual volume price action happening in a short period of time relative to the historical averages. And that means there's a lot of pressure building up here. And we have two options, as always. We're either going to, this is either a fake out, and we're about to turn back around. If we fail like the moving averages here, the key moving averages here, then we're likely to be rejected and get pulled back down and go back to retest these opening levels. The opening 15 minutes are now over. We are still moving in a positive direction, which is for me a good sign, but it's impossible to say until we continue to see the volume incoming. If the volume starts to slow down, then we can expect the bears will be put back into the lead. We do have this is a recovery candle. No, we do have this zone here and this zone here, which are liquidity points. We do have, so now we have all of this zone here, which is on the short side. So anyone down here with a 10x leverage, a 20x leverage is going to be getting crippled right now. And we'll see some pops, but it's not going to be huge. You know, it's going to be about as the same size we can expect. You know, we might get up to 21,500, which would lead us into this zone where we had quite a bit of liquidity and other, you know, some other vector candles showing up in the days past on Friday, for example. Sunday, Saturday and Sunday. What else? That's about it. I'm tired. Good luck in your trading, guys.